Hi, welcome to another session of EOD Talks. I am Ahan Bose.
And I'm Abhishek.
We are very delighted to have Professor Ashish Desai with us on this episode of the EOD Talks. Dr. Desai serves as an associate professor in the Information Management and Analytics area at SPJIMR. He brings nearly 30 years of experience across industry, public policy, and academia. His research studies centers on DPI, which is Digital Public Infrastructure, and on fostering inclusive financial systems. Before SPJIMR, he served as a director of monitoring and evaluation at Niti Aayog. Earlier in his career, Dr. Desai worked in the industry for over 2 decades across Africa, Latin America, as well as in Asia, South Asia, giving him hands-on experience to the designing, scaling, and governance of payment systems. And having been an integral part of the Niti Aayog, he brings in valuable experience, and we really look forward to having a lovely conversation. Good afternoon, Professor Ashish Desai, sir. Thank you so much for your time and welcome to this session of EOD Talks. I'm Ahan Bose, a PGP1 student at SPJMR and part of the EOD club, and I'll be co-hosting this session with my friend Abhishek Ramasubramaniam.
Hello, Professor. Nice to have you here. And we are super excited to host you in this podcast and talk about DPI, UPI, and around public infrastructure that we have. So,
Thank you very much for inviting me. Look forward to having a engaging conversation.
thanks so much, sir.
Thank you, sir. So we'll get straight down to the point. So, Professor Desai, we often hear terms like DPI, UPI, India Stack. So, we really want to break it down for our audience in layman terms. So, if you had to explain this to a local shopkeeper or a student, what do all of these mean?
Okay. Yeah, quite interesting because this is a pertinent topic, but also some of the terms that you mentioned are interchangeably used. So let's take an example, right? And we will start first by if transportation. What does vehicles move? They move on roads. And what do we call roads? We call roads, we call ports, we call airports as infrastructure. What does the meaning of the word infrastructure come from? It comes from a French lexicon which says something underneath on which something else is built. Like you have roads, on the roads you have multiple utility of the roads. You could have roads for moving people, moving goods, moving containers. Same way in a digital realm, you provide certain basic infrastructure on which other applications are built. So what is digital public infrastructure? Digital public infrastructure, by the definition of the word digital, is digital, it's not physical. And infrastructure, as I have discussed, talks about something that lies underneath, on which other applications are built. What is public in digital public infrastructure? And that public in digital public infrastructure lies to the value of creating value for people. Creating value for people so that nobody else is left behind. So let's take an example and talk about this in more detail. You spoke about UPI. While we will unpack a little bit more about UPI and India Stack, what did UPI help achieve? UPI help achieve lowering of cost of transaction, and UPI helped achieve in penetrating the usage of bank account, not just opening of bank account. And that is where the value of for the people lies, the public value. But who provides UPI? UPI is provided by players such as Google Pay and PhonePe and so on. And what do they get in return? And you can go back and look at their valuation. Correct? So while it creates public value of access, it also creates private wealth for the service providers who provide or build application on public infrastructure. So Is it a wild, wild west that you can do anything on a DPI public infrastructure and provide anything? Answer is no. There are regulatory guardrails. And those regulatory guardrails decide what you can and what you cannot do. So in essence, digital public infrastructure is a set, can be visualized as blocks, like a Lego building block, that can be repurposed to create additional applications, which in turn create public value. Now, your second point that you mentioned is UPI and India Stack. So India Stack specifically refers to a stack in India, while DPI is not necessarily an Indian phenomena. It's a phenomena in many countries. India Stack consists of a stack that is for it's a part of DPI, but primarily used in financial services and in regulated industry and/or. So India Stack consists of 4 things, or 3 blocks rather, not 4, 3. Identity layer provided by Aadhaar, payments layer provided by UPI and provided by FASTag or IMPS. And the third one is the data layer, which is a recent evolution. When I talk about recent, it's still about 4 years old, which is account aggregator or consent-based mechanism, which is a data layer. All the 3 provide avenues for private players to create applications in finance, in commerce, in skills, and so on. So UPI is payments layer of a digital public infrastructure, and that is India-centric. We call it as Unified Payment Interface. Similarly, in Brazil, it is called as PIX, which is similar to UPI of India. So UPI is not equal to DPI. UPI is a payments layer or a payments block in the digital public infrastructure.
Yeah. So can we compare it to, let's say, building a physical highway? And why is India building these digital roads instead of just letting private companies build their own walled gardens?
Very interesting question. Yes, indeed. As we spoke about infrastructure and roads, these are digital highways on which you can create applications for the people. Now, let's take an example. If I have a messenger, SMS, which works between 2 people who are on the same telecom network, and there are 2 telecom networks in a country, what will happen? Only 50% of the population is being serviced. Correct? Or you will be able to send messages only to. Yeah. So what is critically required? Critically required is interoperability. Second part, it is apart from interoperability, it is about creating innovations. If you tend to do a wall garden solution, you more often than not stifle innovation or let the innovation only by the company or an entity that is doing the wall garden solution do all the innovation. And B, it also raises a question about interoperability and the cost or the charges about interoperability. So if we have to go down to the base of the pyramid and do inclusion along with innovation, then you require to have an open infrastructure where any private player who qualifies, and why I'm using the word qualified, because the regulator, as we discussed, the regulator put guardrails on what you can or cannot do, can come and innovate and have an interoperable solution.
Got it. So we'll talk more about UPI and the magic of money in the next section. So here are some stats that we found, and that UPI has around 49% share in the global real-time payments. And in 2025, it ended with a record 21.63 billion transactions. That's a lot of transactions. So now, the question is that most people love that UPI is free and instant. But how do banks make money? And what is in it for the banks in this?
Okay. UPI is kind of low cost or almost free for the citizens. I wouldn't call it customers, but citizens. Of course, they are the customers of the banks or financial institutions. But let's take a step back. What do UPI leave? UPI is a part of transactional banking, and that transactional banking leaves digital footprint of transactions. Which means if I look at the digital footprints of the transactions, I would be able to decipher not just your income, but also your cash flows. On this other hand, where do banks make money? In India, for any bank, 70 to 75% of the income comes from asset, not from payments. So what this UPI enables banks to do? UPI enables banks to analyze digital footprint of their customers on which they can structure appropriate products for lending and then subsequently for any third-party cross-sell. And that's the story where they can actually create value both for themselves and their stakeholders, but also for their customers, because many of the customers are looking at an appropriate product, not just any product. So it's about customizing and offering what Ahan needs as against what Ashish needs. Both needs are not the same, so I can give customized products to both of them. That's where I think the financial institutions' income story lies in ability to score based on UPI transactions and offer credit products.
Makes sense.
Right. Thank you, sir. So I think what we are understanding is that UPI, a government enterprise, is creating an ecosystem that is creating shared value for banks, allowing them to deliver more customized solutions for their users. But interestingly, apart from banks, the third-party app providers have also, it would appear, thrived immensely out of the UPI infra, right? So currently, as per the numbers that we are seeing, PhonePe has around 45% market share with almost 9.81 billion customer-initiated transactions worth over rupees 13.6 lakh crore. The next in line are Google Pay and so on. So, sir, what we are really trying to understand is how are these business models working and how are the third-party app providers benefiting out of UPI, a government enterprise?
So you look at any application pro that we have. While we create value, the purpose of any organization or an entity is to create shareholder value also. So in order to create the shareholder value, you require to have current and future income. So what does the TPAPs, third-party application providers, have? Apart from having the transaction data, which also the banks have, third-party application providers have a host of behavioral data of the customer or the consumer who is using that TPAP. Right. Let's take an example. By taking appropriate permissions, you possibly know where you stay because you have the geolocation. You possibly know where you work because you have the geolocation. You possibly know, do you drive a car or do you drive a bike, because you know the distance and you know the time taken. You possibly also know, because if you have taken the permission, how much is your salary and where do you spend. You possibly also know your music preferences, and you also possibly know your social network. A result of which is I can use this sets of data to curate a product that you want and offer it to you at the point of time that you want, not when it is irrelevant to you. For example, if I want to promote a burger, there is no point of promoting a burger when you're just going to hit your bed. It's on the way when you're from your work to the office, and that's exactly we can decipher based on patterns that you leave behind, which is called digital footprint, on what products and when to promote. And do this TPAP promote it on their own? Or rather, do they offer it on their own? Answer is no. They partner with product provider and offer those products. A result of which is that consumer uses those products. And when they consume those products, they leave additional digital footprint, which allows them to do more data mining, and more data mining allows them to sign up with additional partners, and the flywheel continues, which gives them a leverage of doing appropriate customer cross-sell. of newer products, creating future value. And that's where it is for them, the future value or the valuation that gets projected. So TPAP primarily focus on the data that has been collected for offering multiple products and create the flywheel effect that goes into self-sustenance mode.
So thank you, sir. So, what I'm gathering here is that in this entire flywheel and business model, it appears that data is coming out to be like oil. That's the fuel driving this entire phenomenon. Yeah. So now, the moment we talk about data, the first thing that comes to mind is data privacy, data protection, and increasingly there have been companies that have come under scrutiny in India as well as globally for not having the best practices, for misappropriating user data, and so on. So really what I want to boil this down to is how is this data benefiting the user? And I think you did expand on that, but also the protection and the regulation aspect of it. How do these third-party application providers convince their users that their data is indeed secure and being utilized in the best interest as per regulations?
This is a relevant and a topical point. First point, I would rather contradict to what you said is that data is not the new oil.
Okay.
Because oil depletes.
Yeah.
Data has a unique property that it doesn't deplete. The more data you consume, the more data gets generated. Which means if you go back, data, oil is a rival good. If I have it, you can't have it. It's fixed good. But data has a unique property of being negative rival. The more you consume, the more you generate. So unlike being a data as a new oil, one would tend to look at it as a fusion and say that data is the new sun. Right? So that's a unique property. But having said that, what is critical over here is consumer or citizen consent. Okay. And it is not just a question about consent, it is a question about informed consent. What do I mean by informed consent? Why are you using the data? Who is the owner of the data? The customer is the owner of the data. The entities are only fiduciaries or custodian of the data, which means to use that data, you require specific and explicit permission of the owner of the data. Fortunately for us in Indian context, we have DPDP, which is being institutionalized, which also has evangelized a data regulator, which will address some of these concerns of no data leakage, no data sharing without consent. Yes, it's a journey, but that journey has already started. And while there are laws and regulation, but it is not just laws and regulation, it is also about data, is also about ethics and governance. And that's where it's going to be an interplay between law, ethics and governance. How do three interplays to ensure security and safety of the entity's customers, but also country's citizens. So in short, while the regulatory framework and the regulator that is evangelized puts this as a priority, the onus will also lie on the companies of how they manage data privacy, not just data security.
So you talked about informed consent and that the entities are custodians of this data. But then the question is, will it benefit or will it actually pose a challenge to these financial institutions?
Yes and no. Okay. Why yes? Because there is more process to be followed. But let's roll back a few years. If you look at two-factor authentication on an OTP for a card payment, everybody thought that an OTP is going to create challenges and a card transaction will tank down. But in fact, the card transactions grew because that two-factor authentication inherently gave citizens and the customers a feeling of security. So while initially we might look at it and say that yes, it might look like it's going to be a challenge, in the long run, answer is no. But to address this also, what we have is at a financial institution level, a integrated framework of account aggregator. Account aggregator framework was conceptualized by the regulator back in 2016 with about 16 licenses being issued. And by 2021, it was operationalized with an apex body which facilitates, as an industry body which facilitates this, which is called as Sahmati. Now, what does this account aggregator enable? Suppose I am a customer of bank A and I want to take a loan or a product from bank or a financial institution B. I can go to financial institution B and through an informed, secure consent process, make sure financial institution B has all the data from financial institution A for the purpose for which I want to share the data. Now, this framework, which includes regulation as well as technology being laid out, it provides the necessary edifice on which it can be further scaled with the DPDP being an dimensions on the framework, so that it aligns to both the data regulator as well as the banking regulator. So with the edifice already in place, it's a pivotal point from where it can actually scale. So I don't foresee it to be a roadblocker.
So we talked about UPI and how financial institutions are playing a part in this. But the next question is that where else is this digital public infrastructure used? Is it beyond financial services or just restricted to this one?
Well, as I mentioned, right, there are fundamental blocks, which is identity, payments, and data. And on top of that, there are various sectoral blocks, which are for particular sector. For example, we have ONDC, Open Network for Digital Commerce, which is for commerce, or Honest Network in India, ONEST, which is for skills. Similarly, we have a DPI for energy. So while we have three building blocks, there are sectoral DPI. So let's take an example of ONDC. What is ONDC enable? ONDC enables two things. One, it enables interoperability. Okay, so the buyer and the seller do not have to be the same entity, or rather do not have to be on the same platform. The buyer and the seller don't have to be on the same platform. That means the buyer can be on one platform and seller can be on the another platform. But to do that interoperability, what it also facilitates is unbundling. But when I do a commerce, I have to pay. And how will I pay? And that's when I resort back to my fundamental building block of UPI to do the payments. So, is this for only finance? Answer is no. It is scaling, and it is opening up for other sectors. The financial applications have been, and we commonly allude to UPI because it has been scaled to a population level for a while. Maybe it is because of demand, maybe it is because of COVID, but that comes to us as a top of the mind. But long story short, it is not just for finance, it is for other sectors also.
Right. Thank you, sir. So one of India's biggest challenge towards its growth has been the access to credit at the grassroots levels of our country. Now, with internet spreading across India in recent times, and with the introduction of generative AI, what I'm really trying to allude to is, with these technologies being more accessible, can a farmer in a remote village in India get access to loan much more easier or relatively on the same terms as a person sitting in Mumbai or Delhi or Calcutta? Yeah.
You are posing the problem from demand side, but you got to look at both the supply side also. What do I mean by when you look at the supply side? It is not accessibility, but it is also availability and affordability of the credit. And what is affordability? Affordability lies in the point of what is the interest rate I'm going to charge. Any risk is a good risk at the right price if you can quantify it.
Yeah.
But the market as well as the regulator won't allow you to go beyond a particular ceiling. which means a critical part from a supply side is to quantify risk. And to quantify risk, what do you require? You require is data. And what is risk? Risk is nothing but a standard deviation from the expectation. Which means if I have to quantify it, I require to identify what is the expectation of repayment or collection. What these data points help, we spoke about UPI leaving digital footprints, we spoke about TPAPs having behavioral data. What these help is to create algorithms that can give insight to the lender of ability as well as willingness to repay. And once you have that insights, that can be used to structure a credit product. And what is a credit product? Credit product is primarily a combination of value of the loan, duration of the loan, and interest of the loan. While telecom networks and internet penetration allows you to reach the customer, which is accessibility, data allows you to structure the product which makes for the same farmer or for the same person affordability. So DPI along with the other infrastructural blocks of telecom definitely does facilitate credit access. But it facilitates credit access to the industry. But for that, what you require is appropriate data sharing, policy and regulations.
Right. So can you elaborate more on how the policy and regulation around data plays, and like what is a key factor, maybe how policy is impacting how data is being used?
Well, data is an input, but to use the data, you require appropriate policies and regulations. Because primarily, who is the owner of the data and who is the custodian of the data? We spoke about that. Now, on one hand, the data can be used by private entity, which is financial institution or non-financial institution, through a consent framework to structure products. But data can also be useful to government to structure not just policies, but also schemes. Where to do a particular grant, why to do a particular grant. And that comes from having deeper insights of what's happening on the ground. What we call it as evidence-based policymaking helps the policymaker, that is the government, to structure appropriate policies for avoiding two things: error of inclusion and error of exclusion. Those who should not be getting any grant are getting grants is called error of inclusion, and error of exclusion is the other way around. So while DPDP looks at it from a private sector data sharing mechanism, the applicability of this data sharing goes through a consent framework beyond just private sector. And I would like to leave the realm of TPAPs and private sector data generation to a different kind of data, which is being used in policymaking also. And that is remote sensing, spatial data. Nighttime light, for example, is a data point which is captured by the satellite. And academic literature talks about nighttime light having a relationship with GDP. Which means I do not need to wait every quarter on quarter to know the GDP. Neither do I have to do a GDP at a state level. I can, using nighttime light as a surrogate, can come to an approximation at a district or a taluk level also if we want. Overlay this nighttime light with UPI transaction and we see a relationship between UPI transaction and nighttime light, which means UPI transaction and nighttime light move together over long range. Which means where I'm going to is that if we have data, which we do have, these data points can be used also by the policymaker for nowcasting, not just forecasting. And that becomes the power of data.
Right, so thank you so much. Sir, I think at length we've discussed about DPI, we've discussed about the ecosystems it creates in the form of UPI, how it is enabling third-party app providers, how it's creating value for banks, how it's creating value for users. We spoke about some of the critical challenges faced by economy in terms of access to it and so on. Now, sir, at the end of the day, you have been you have worked with the Niti Aayog, and essentially you've been in the control room, creating, enabling, evolving many of these policies and government schemes that have taken these infrastructures to where it is today. That being said, while you were working for the Niti Aayog, what were some of the moments where you realized that technology isn't just an enabler or an add-on, but essentially the backbone which is driving modern India and it sort of would enable the Viksit Bharat vision that we all share as a country?
And this is a very interesting and long discussion, but I'll try to keep it short. Technology helps us from not just enabling development, but also monitoring what development or quantifying development. For example, if you look at it, DPI is not just a technology stack. It is actually a policy instrument that allows credit to move into consumption. Credit comes into bank account, so monetary policy impacts credit. Credit comes into bank account uses UPI, UPI generates the cash flows, and cash flows go into consumption goes into GDP. So it becomes an inherent policy instrument, not just a technology artifact. The second thing that technology has helped us is quantify some of the data points to measure development. And I'll use an example. If I want to measure the impact of a scheme such as Amrit Sarovar scheme, which is rejuvenation of water bodies, going across 350,000 or 4 lakh water bodies and measuring before and after rejuvenation is just next to impossible. But you could use satellite data and measure before and after not only the circumference which gives you the water content or the surface water content, but you could also measure CO, methane and other parameters, temperature, agro, horticulture, which then gives us some insights whether rejuvenation has actually caused a second order effect. And this helps us in narrowing where to do physical surveys. While we are saying that the alternative data is useful or this data is useful and but it does not replace survey. It only helps us to do where to do survey. If you have outliers, you go and do a survey to fine tune the policy. So when we talk about this whole high velocity, high volume, high variable, high veracity data, which is big data, it helps us as a mechanism or a policy instrument, but it also helps us measure the impact which feeds back into the policy to fine-tune the policy for the development of the country, which goes on to the path of Viksit Bharat.
Right. Thank you, Professor Desai, sir. It was an absolute pleasure talking to you. And as students, to be able to share this time with you and learn from you is a great privilege for all of us. We hope that this session would also add value to our viewers. And thank you so much for your time, sir. And thank you, our viewers.
Thank you very much for having me over here. Look forward to engaging.